Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP. So let's just dive in and let's start off with this tweet here. So I tweeted out earlier today, I said Bitcoin pumps at 25K, and all of a sudden crypto Twitter is saying bull run is confirmed, Bitcoin at 200K, Bitcoin pulls back to 22K. This is just the beginning, Bitcoin at 10K. And I did mention here that emotions are so strong in this space, it's comical. It's either overly bullish or bearish at all times. Now, I will say this. I do believe that Bitcoin can come back down to about like the 19K region, but after that, I do believe that we go to 30K plus. But what we are seeing right now on Twitter is a FUD campaign. You know, if you go over to Twitter right now and you look up, Tether or anything, like there is so much FUD right now around crypto, and it's almost to that point where like everyone's uncertain on what's going to happen next. I think that most people are going to get caught off guard with what happens next around the space. I've talked about where we are going. I do believe that 30K is the next target after we do finish up this pullback. But we do see here from the Kapaisi letter, which is an account that has over 190,000 followers. We do see crypto markets this week. Visa halts crypto products on regulation worries. SEC says crypto exchanges are not safe. Crypto.com suspends payments via Silvergate. Coinbase does the exact same thing. We see Coinbase delist Binance Coin due to liquidity concerns. $200 million liquidated in minutes Thursday night. Regulators warn banks of crypto liquidity risk. FTX confirms $8.9 billion in missing funds. Is a crypto liquidity crisis coming? Now, I want you guys to go back to March of 2020. All right. March of 2020 was the darkest days of crypto. If you have been in crypto for a while, and if you were around during March of 2020, you could agree with this. It was the most uncertain time in this market in the history of crypto because nobody knew what was going to happen next. People thought it was the end. People thought everything was going to zero. Everyone thought that crypto as a whole was finished. You also had a lot of calls on Bitcoin down to like, 1K, $500. It's going here. Like the amount of FUD that we've seen around crypto at the bottom was insane. And we continue to see it like that now. Now, I will say this, FTX was a scenario that I do think could very well have marked the bottom for crypto. Am I going to say that the bottom is in? No, I will not, because we don't know. There could be a looming black swan event around crypto that could bring us down much lower tomorrow. But that is exactly why this market is always uncertain. This market's moving 24/7. You don't know what could happen next. That's why I always say, leave some staples on the sidelines at all times to buy, because you never know what is going to happen. But I will say this. I do think that the FUD generator is always moving. I think that at the bottom, you'll see the FUD generators going crazy, mainstream media going crazy. And even now, most of the uncertainty around crypto is made by regulators. I actually seen this video get posted by Fame21 More, aka XRP Darren over on Twitter. We do see Old Slithering Snake against the response to Brad Garlinghouse claim that the SEC is regulating by enforcement. Listen closely to this video. It's about 3 minutes long, but I want you guys to listen closely, and I just want you guys to understand the SEC's motive here, because I will be going in depth on it in this video as well. But listen closely to this.
What one particular builder in the ecosystem, the Ripple founder, had to say a little bit earlier, if you could just take a listen.
The SEC is kind of playing offense and attacking the whole industry. This is not a healthy way to regulate an industry. Regulation through enforcement, as opposed to where we're seeing in other countries where they're doing the work, right? They're codifying, they're creating a framework that allows an industry to grow while protecting consumers. And I think that's really what the U.S. is lagging.
Now, Chair Gensler, I'm pretty sure you might say, well, look, a founder in that sort of business might be saying this, but what about some of these players? We've spoken to many who have perhaps been part of previous administrations who are now, advisors to some of these companies and worried a little bit about the holistic nature of really trying to regulate and worried that it is more about enforcement rather than rules of the road at the moment.
Caroline, there's nothing incompatible crypto and our securities laws. Our securities laws were brought about to protect the investing public against fraud and schemes and manipulation. And it was through this idea of full, fair, and truthful disclosure, registering with the SEC when you're raising money from the public and the public's anticipating a profit. It's pretty straightforward, actually, common sense approach to helping the public in investing. So this broad field, we have one goal at the SEC, is for them to come into compliance, whether it's the tokens, that's basically people raising money or offering these tokens. And it's also what I'll call the storefronts, but they can call themselves crypto exchanges or lending or staking as a service or other intermediaries to come into compliance and ensure that they don't mislead the public, but also that they don't commingle the funds, they don't take the public's funds and do things we just don't allow in our financial markets. We don't allow the New York Stock Exchange to also play with the customer's funds and make markets, run a hedge fund, run a dealer, be in the clearing business. We separate out those conflicts.
Mr. Gensler, thank you for your time. You've set out the goal there. And what I want to ask you about is the results of your actions. You have asked a number of names in the crypto industry to register their products with the SEC. Very few have, in particular, those that are most known to us, the bigger names in the industry. Why are they not acting on your requests?
Well, the law is the law, and they need to come in and properly follow the laws, and we will work with them to do that.
You know, so this video helped everyone kind of understand that the SEC has no transparency. There was nothing in this video that explained the motives at all towards crypto companies. Come in and talk with us. Come in and talk with us. Somebody in the comments said, they quote it, "Come in and bribe us," and you know that's probably most certainly the motive here is like they want these companies to come in so that they could see the cracks in their business and give them zero transparency and then target them. And most of it is for a payday. It's actually disgusting, but again, we see the SEC in this area where they think that they're you know, some sort of higher up around crypto. They have no jurisdiction on crypto at all, first off, one. But two, like the idea here is they are regulating by enforcement. They're not giving any transparency. There is no fair argument here at all. And the problem here that I have with all of it is nothing is moving. There is nothing going on in terms of the regulatory standpoint for crypto regulations. It's a big problem. It's a huge issue. But we did see today a big update from Ripple. So shout out to Jeremy Hogan. We do see Ripple just filed a strong case supporting its fair notice defense. Strong because because it comes from the U.S. Supreme Court and states that regular-ish people like you and me need to have guidance and know what the law/rules are before we are sued. And yeah, I think that this is honestly great to see. I really do think that this was a huge update. I think that the fair notice defense is definitely one that we should focus on. Now, it doesn't mean that the fair notice defense is great, because remember, Johnny Deaton even said, like, the fair notice defense, if it does get to that point, it's not going to be an easy fight for Ripple. But I do think that there was a lack of fair notice. I think that the fair notice defense definitely is an argument point that needs to be focused on. But I am very interested to see what happens by the end of this month. I'm more so interested to see what happens by the end of the summertime, because I do think that the summer is a key focus point for this case. But I did think that this was a pretty big update. The fair notice defense definitely is one that I have focused on quite a bit in terms of a defense as well as an argument point from Ripple, because I don't believe that they did get any fair notice. They were meeting with the SEC on multiple occasions, and again, there was never a discussion on what they were doing and how it was wrong and how it was going against the Howey test and all this. So again, I do think that the SEC definitely dropped the ball in terms of like the fair notice defense area. But also, right, With all of this, with all of the regulatory discussions, we do see from XRP_Crow, he's quoting, there's an image here quoting Bloomberg TV as well as Brad Garlinghouse, but we do see crypto companies are leaving the U.S. We do see if the U.S. doesn't get its act together, is all of this crypto going offshore? And we do see a response from Brad Garlinghouse. It already is. And the interesting thing about that is that, yeah, if you look up crypto companies leaving the U.S., there's pages on pages on pages here as well. But we do see, keep crypto in America one day ago. Because even if much of the crypto industry left the U.S., crypto won't. Crypto businesses will just go offshore, where U.S. regulators don't have any jurisdiction. Ripple Council's advice to crypto firms: get out of the U.S. Innovation is already leaving the U.S. from Brad Garlinghouse, and there's a lot more here. But for the most part, like even Binance was leaving the U.S., which also going in depth on like the FUD statements here. We did see a few updates from Binance earlier today about the SEC going after Binance as well. Binance could easily move outside of the U.S. In fact, they already talked about suspending U.S.-based dollar transfers as well as getting rid of US-based dollar pairs on their exchanges, which is a huge move from them if that is the case. But also, all of this is very important because we've seen a post from Wrath of Kahneman. We do see interesting article out of Hong Kong noting regulatory developments set to reduce the digital assets that can be offered. Mentions Ripple lawsuit. This is significant given Hong Kong's role as one of the major FX hubs and demonstrates the damage the SEC is causing. And yeah, check this out. So, however, it is expected that retail access to virtual asset trading on licensed VATPs will remain very restricted at the initial stage due to the eligible large cap virtual asset requirement and non-securities nature requirement proposed by the SFC, which would restrict retail investors to Bitcoin and a very limited suite of mainstream tokens, if any, given that high-profile actions have been taken by the US SEC against some of the long-existing cryptocurrencies, e.g. Ripples, and some even start to question the nature of Ethereum after it has changed from proof of work to proof of stake. It remains to be questionable which remaining tokens can be safely opined as non-securities tokens. And we do see Johnny Deaton responding saying, this is what I keep telling my international brother and sisters. Eventually the US will be left behind, but it still impacts the rest of the world. Look at XRP. Singapore, Switzerland, UAE, Japan, UK, and others have declared XRP a non-security, yet here we are. And we do see, yes, particularly with FX, US, Hong Kong, UK, Japan house a disproportionate amount of FX options. If regulations cut off crypto there, it will be pushed to outskirts globally. And yeah, that's exactly what is happening right now. Like, we are seeing a big fight here. Like, this is a huge war. And by the way, I just want to give everyone a big warning. Like, with all of this regulatory uncertainty, with all of the discussions around regulations and all this, like, this is becoming a known idea that, like, this is becoming a shakeout event for retail. They want us out. They want us all out. Like, that's like, they want to say that they're here to protect us. Like, Gary Gensler always says, we're here to protect you. We're here to protect. Like, even in this video, he's talking about investors and how investors need to be protected and this and that. One of the biggest things and one of the biggest misconceptions that I've had with regulations is they always claim that it's for our own good. Did you even notice that with like CBDCs? Oh, it's better protection. It's better this. It's better that. It's better, whatever. All of it is nonsense. They want to claim that it's for our protection, that it's for our safety, our security, this, that. But we all know that that is not the case. They want us out of crypto so that we don't get extremely wealthy, because crypto, for the longest time, since the inception of Bitcoin, has created and allowed individuals to create incredible wealth opportunities. Staking as a service, he mentions it in this video. Staking as a service is a big one because we are earning APY that banks and traditional banking entities cannot offer. Meaning, why would we be utilizing these big banks? See, we're seeing this big momentum shift in the traditional financial world, where individuals are tired of utilizing these traditional offerings that are giving us fractions of a percent on our money, where we could earn 10+% in crypto. I've talked about this even with Casper Live, right? You go over to Casper Live. So for those out there that are holders of Casper, you guys are probably all aware of this. You could earn 10.71% APY on your crypto right now. That means that you are earning 10%. Tell me a bank, tell me any major financial offering in the US that is giving you 10% on your money. I will wait, because guess what? There is none. That is why these regulators are going rampant on crypto. They want you out of crypto because there is offerings here that are not even comparable to the traditional world, meaning dominance is getting taken away from the big suits, the elites, the big bankers, and it's coming over here to crypto, where a new world of finance is being born. And that's a big issue for them. So with that being said, I hope that you guys enjoyed this video, because definitely leave a like, subscribe, turn notifications on because I'm more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. As always, hope that you all have a beautiful day, beautiful night. If you guys are on this before, this has been Nick. Peace out, guys.